Happy Friday, Pat.
Hey, Rick, how you doing, buddy?
You know, I don't do anything all week. I just sit here and wait for our Friday call.
Yeah, exactly. Me too.
You know, I got a remote for my sound bar behind me here, so I can turn it down in case it starts blasting too much. So, boy, interesting week. I can't wait to share a bunch of numbers with people. So but let's tell our YouTube subscribers what we're offering. Okay.
All right.
So for our YouTube subscribers, I'm offering, you have to be a subscriber and I can find you, $800 in closing cost credits for any transaction over $400,000 and $500 for anything under $400,000. So that just goes right directly to your closing costs. So it'll help cushion some of the blow there. And Pat, you have got what?
I'm going to pay for appraisal up to $400. Sometimes appraisals are, maybe $500, but I'll go up to, contribute $400 to appraisal costs after closing.
Yeah, so that'll help a lot. And for people that, probably know watching this too is, Pat can really do a deep dive and save you some money on fees. But, we work together as a team. And so if you're looking to buy a home or sell a home, we're here to help. And so just, shoot us an email. Now, I do want to say something for buyers right now. That same credit that I'm offering for, or I want to say for sellers, that same credit I'm offering for buyers, I'm offering for sellers. But I want to let sellers know something that I passionately believe in. And that is, if you're listing your house, please do a virtual tour. Have the agent pay for a virtual walkthrough tour. It is so important. I showed a house last week in Gilbert, the buyer's in Chicago, and we couldn't quite figure out the floor plan. It said there was a loft. We're looking in the pictures. We can't see the loft. Where is it? There's a bedroom that's somewhere, but we wouldn't quite understand where it was. And so I get there and I filmed the house with my GoPro, and there was a bedroom that was an office that was off the living room. And had I not gone there, we wouldn't have known it. Had they had a 3D virtual tour, everybody could walk through the house with their mouse. And there are so many out-of-state buyers right now that I would make that a requirement. Two things. If your agent walks in and starts taking a picture with a cell phone, I'd fire them. And I'd make sure that I got a virtual tour, because imagery is everything right now in this market. And they will write offers from New Jersey if they can see your house and see it well. So I'm just going to get off my high horse there. Wouldn't you agree, Pat? I mean, it's a big difference.
Oh, it's huge. I mean, even you could have the house, but I mean, I had a seller or buyer a couple months ago that they loved the house. They even just, they didn't get a picture of the neighbor. Next door neighbor was a hoarder. I think I told you about that.
Oh, and yeah.
He didn't want to live next to a hoarder. The house was fine. But he said, I want to live next to a hoarder. He goes, it would have been ridiculous. So
yeah, and Google Drive is good for that too. So when you see the house in the neighborhood you want, make sure you look it up on Google Drive and then drive around the neighborhood. So I went through the neighborhood with my GoPro and then commented on what I saw. I did it on both houses, so it was easier for them to make a good offer decision. But so I wanted to start out today talking about Chairman Powell, Jerome Powell. He's chairman of the central bank, and he gives his talks all the time. So he gave a talk this week, and the Federal Reserve can only do so much. They've got rates at near zero, and he doesn't want to go negative. But he used words. He said there's a lot of scarring in our economy right now. He's not seeing us getting better, in the first half of this year. There's a lot of damage that's been done. And people tried to press on him to discuss, well, you're buying all these bonds and mortgage-backed securities. When are you going to start to taper? And he said he would not and doesn't plan on discussing taper at any time soon, because back in, I think it was 2018, they had what they called a taper tantrum. He started pulling back and the market reacted negatively.
Yeah, I mean, rates went up probably about 3/4 of a point I just don't remember the scale, but it was they went from like low mid threes to like 5% very
Yeah,
short
and
short period
it
of
was sudden. But my impression over his talk is that he's, the markets are the ones that really control where interest rates are. The Fed, you know, pulls their overnight rate down to zero, and then the bond market and treasuries react from there. He's basically just trying to use as much verbiage as you can to try and keep people from pushing rates any higher.
time.
Yeah, because that's kind of all he's got left in the toolbox now is words. I mean, there's other things he says he has, but he had an interesting comment on housing that that I thought was, well, interesting. He said that this pent up demand that was in the housing has created a one-time shift, that there are people that were planning on buying, and then with the pandemic, they felt like that now they can work out a home that they wanted to buy, but then we were propelled by low interest rates. And he said the price increases will not be maintained. That he felt that this was just a time, so a period in time where homes are selling like crazy. And he says going forward, it will level out. These pricing increases that we're seeing now won't be maintained.
Interesting.
So, yeah, it's going to be interesting. He didn't say that prices are going to come down. He just, if you're going up 15, you're going up 16, that's not going to continue. You may only go up 3. You may go down 3, but he's saying it won't be maintained. So, so now the price Schiller indexed. Thanks for the video, Mater. Hey, you bet. Hey, look, appreciate it. I want you guys to stay tuned. It's going to be about, I think, a week and a half. I'm going to have my new studio ready, and we're going to be doing a live blog every morning at 8:30. I did a survey. Some of you may have seen it in the community tab, and it said you want to do it 7:30, 8, or 8:30, and so far 8:30 is ahead. So we're going to start doing that. But I want to show one more thing here. I have been looking for this chart, Pat, because it's something I used to follow back in 2006. The Case Schiller study, and back this time Schiller wasn't, he was on his own, so I was always reading his stuff. So he had a chart on affordability, and I want to share that with you because I found it today, thank goodness. So here it is. I'm going to expand it out there. So now my little blue pen here is kind of a little bit of an explanation. You can see here in 2005, 2006, that affordability went way out of whack, right? But yet people were still buying these houses. Well, the affordability, the math behind it was calculated on the prevailing interest rate of 7%. The reality was people were sitting with 1% adjustable rate mortgages. So the affordability index says they were down here, but they were partying down here, right?
Mm-hmm.
In the 1% range. And then when they reset, they could no longer afford the house. They were up here.
Yeah.
They had to give it back.
All the loans that were,
went out.
a majority of the loans that were written were interest only, 327s, 228s, basically meaning fixed rate for 3 years and then adjusted for, after that. And there was a lot of shenanigans going on.
Well, $900 payments became $2,100 pretty easy.
Yeah.
This is where we're at now. So the affordability is going up. I mean, house price index to median household income is what this is. So we are higher. So houses are reaching a period of unaffordability, but not to the rate that we did in 2006. And these are things that gradually adjust. So where we're at today, we have 5,355 homes on the market. Wait till you hear these numbers. Avondale has 20 homes on the market for a population of 85,000 people. And the Cromford report said, we may see a day where there's nothing for sale in Avondale. Imagine a city with nothing for sale. Avondale's almost there. Maricopa, city of Maricopa, 62 homes, Normally, they would have about 400. Gilbert, there's only 88 homes for sale in Gilbert. Chandler, there's only 110. Now, the Cromford report made a comment that said the buyer activities backed off a little bit, but I don't see it in my 7-day moving average. So right now, past 7 days, we had 3,505 homes come on the market, 3,983 go under contract. The under contract numbers are these gold bars here, and the blue ones are listings coming on the market. And these homes coming under contract, it's going along at a pretty good clip, right? The reason this number is going down, our inventory is going down lower, is because we're outpacing that blue line by 400 to almost 500 homes every 7 weeks. We got down below 5,000 homes this week for the first time ever. So that was, we hit 4,970 homes. So, so Terry, can I still get in here? Room available? No, you have to sit outside and wait, Terry. Jump in, pal. So ask questions, folks. So anyway, that's where we're at. The inventory is it's just nuts. I saw a home come back on the market last week in Gilbert, Pat. And when I went and looked at the appointments for the next day, there was one slot to make an appointment. So I just went and said, hey, I tried to make an appointment. There's no room. Do you mind if I just do a quick walkthrough? So tell me, what did rates do?
Rates, they did. I mean, I have this lady that I'm doing a refinance for, and rates, obviously back in the 8th, let's see here, January 8th, 7th, 8th, they crept up. They when I say spiked up, like you said, it's not going from, say, 2.5 to 3, but you might go from 2.5 to 5, 2 5/8, or 2 5/8 to 2 3/4. And this lady, I was quoting 2 3/4 with just to give you an example, on the 8th, I was quoting her 2 3/4, but to get to that rate, we would have to wait. I mean, basically, it was $1,800 in closing discount points to get that rate at that rate. And I said, just hang tight, hang tight. She was getting a little impatient. I said, just hang tight. Well, in a week and a half, it went from 2 3/4 a cost of $1,800 down to basically no cost whatsoever. So basically, in 5-6 days, she saved $1,800 in her closing fees. I just waited. But to answer your question, though, rates have they come back down a little bit. They've been once again sitting in this pattern of about refinances 2 3/4, 2 5/8, 2 3/4, 2 7/8, depending on your credit score and LTV. But they've been steady. They're kind of, once again, I don't see them going much further, much lower in the short term. I mean, we're going to see, I think, anything there's a lot of turmoil out there with, what's going on with all, this economy, the moratorium. They obviously they pushed the moratorium out and not until end of March, and people can get extensions actually for 6 months past that. So they're kind of kicking the can down the road a little bit. But like we talk about, I mean, even if we did see forbearances that turn into foreclosures, I just think that there's a subset of people out there that, that those millennials, those new first-time home buyers, I think they'll be smart enough to realize it's a buying opportunity and not get scared.
Well, this time versus last time is that there's far more institutional investors now. Wall Street investors right now are even looking at investing in developments that are all rentals. So they build a development, and those are not homes for sale. They're rentals, because most of the rental homes you get now are older homes. So they want to build new ones that people can rent. That's going to continue to put downward pressure on available single family homes.
Yeah.
Not a lot, because they're not going to be building a lot of them. But I think, it's right now. I mean, it's just, you check things in the morning and you call the agent and And I had one this week that, as soon as we saw it, I called him. I go, "What do you got?" And he told me what he had. And I said, "Okay, I'm going to be there at 1 o'clock. I want to take a look at it. Is that okay?" "Yeah, you bet." So tell me what your sellers are looking for. Tell me what kind of offer is attractive to them. Do they want to close quick? Do they want an extended close? Tell me some of their push, their buttons. And those are healthy conversation before you go show a home. Don't just read the MLS and go and look at it and come back. Call the agent. So what do you know about the neighborhood? How do you think repairs are going to go in this house? A lot of things need to be fixed. How's the roof? And preliminarily try to get as much information as you can. And we decided that the best offer to do was to give them the offer with a generous lease back option, so they don't have to move right away.
Yeah.
And
have a strategy. Have a strategy.
Yeah, it's not all price.
No.
Have a strategy. And so I think, and now having said that, there is an off-market listing coming up, and I think it'll be on the MLS tomorrow, downtown Chandler, 3,000 square feet for 510, within walking distance of all the restaurant stuff. So it's on the north side of Chandler Boulevard. So if anybody wants an early view of that, hit me up, and I'm supposed to get the information tomorrow. So you might be one of the first ones in there. So Pat, you're an ex-stockbroker. I couldn't wait to pick your brain about this. Gamestock. Here's what I know. And basically just from doing as much research as I could on it, that Melvin Hedge Fund did shorted GameStop to the tune of 120% of their available shares. So that's all public knowledge. So they were counting on the price to go down. These Robinhood, they call them Robinhood kids, but these Robinhood investors, Robinhood is a phone app just like Webull, and you can, buy stocks on there, and they don't charge a commission. They saw the data and said, "Hey, wait, time out. These guys are forcing the price down so bad on GameStop, they might even put them out of business. And yet they're going to make all this money." So they had a forum on Reddit for investors, and they kind of did some crowdfunding and just put out the word and go, "Hey guys, start buying up GameStop. Let's not let these hedge fund guys drive these guys out of business." And GameStop went from, what was it, $5 to $385?
Yeah, something like that. I mean, back in my day when I got in, my timing was pretty impeccable when I got in to be a stockbroker. I got in May of 1987. And you know what happened in October of 87?
Yeah.
I remember sitting around the quote. They had a quote, what they call quotrons. They were actually dumb terminals that you could get stock quotes on. And we were just amazed that the market was down over 500 points. It was how things have changed now. I mean, the market was down 700 points here the other day. I mean, it just, or, whatever, 600, 700.
Here's the scary part about this thing that I didn't know. So I didn't know that. So you have brokerages. 97% of all transactions go through a clearinghouse called ETC.
Yep.
So the brokerage handles the transaction. So you sell a stock to me, okay, and it sits in ETC, and it takes 2 days to clear it for the money to transfer.
Yeah. Well, actually 3 days. Yeah, 3 days.
ETC jumped in and said, if we allow all these shares to be sold, if they start getting sold all of a sudden, and Melvin's not going to be able to cover the shorts, their options, they're not going to be able to cover it. They said, we're going to go belly up, as we won't be able to fund these transactions, and the market will essentially shut down. Robinhood halted trading. Webull halted trading. It was kind of weird, though. They said that you could sell your shares, but you couldn't buy anymore. And so it's a large debate now as well. Who was at fault? The Robinhood guys, which are kind of like, hey, we saw the stock was going down. We didn't like how it was going down, so we just all went out and bought it. And the hedge fund guys, oh, that's not fair. Well, what they were doing wasn't fair either. But my concern was it almost completely shut the market down.
Yeah.
On one stock.
I never, it was bizarre. I mean, because there's been shorting going on for years. I mean, you basically when you short a stock, you're borrowing stock you don't have with the hopes of buying it at a lower price. But I think fundamentally, GameStop. I mean, I'm just looking at the fundamental. Eventually, fundamentals are going to play a role, and yeah, they're kind of get. I read something, and I believe this is true. They're going to go the way of Blockbuster Video because you can download everything.
Yeah, and these buyers that jumped in, like got in like 200 and thought they were really going to kill it, they're going to find out that earnings actually do mean something. People on both sides are going to get very burned in this transaction.
This kind of has almost got the feeling of 05, 06 with the loans. People were doing by just that craziness, that out of whack.
I saw a chart this week that the margins on stocks are way out of whack. There are people borrowing all this money and the stocks are still down here. So it's almost like, they're spending too much. So we have he says the shorter should be at fault, shouldn't be able to short over 100%. I
totally agree with that. I mean, because when you're starting, that's like selling a home or buying a home that is not even there. You know what I mean? That'd be like selling a home that you don't even own. Well, I mean, which is, if you think about it, the concept is really kind of stupid and creepy. That you can sell stock you don't even have, or I mean, I understand shorting a stock to the point of how much stock is out there, in the float.
Sure.
But there should be a limitation. There should be just a stop gap and say, okay, there's there's 70 million shares outstanding. You can't short more than, there can't be more than 70 million shares shorted.
But the market should be able to say, look, if you don't have the money to cover it, you got to go bankrupt. They shouldn't be coming in and saying, we're going to stop the trade, or we're going to, I mean, it's okay for them to get other hedge funds to bail them out. But pal, if I made a bad bet on a short, there's nobody bailing me out.
No. There's some going on there. It just doesn't sit well with me. I mean,
I watched a stock guy. I don't know if you watch Meet Kevin at all. He's pretty entertaining. He's a young, successful guy, and he's worth a lot of money. But he's got a great YouTube studio set up, and he's very animated. And so he was going to watch an interview between Ocasio, whatever.
Yeah,
AOC. And she was going to interview this California guy, this investor guy. And so he wanted to see this. Well, that guy, he was waiting for like 45 minutes to him to come on. And I think the guy bailed on the interview. And she's got her studio lights up and she's talking and she's trying to tell everybody what's happening. And this guy kept going, she has no idea what she's talking about. She was just he says, she's just trying to look smart right now, take advantage of a crisis and trying to explain how shorts work. She's got a degree in economics. She couldn't explain how a short works and couldn't explain how it's going. And so they finally he switched over to an article talking to the president of Webull, which is another stock. And he explained it quite clearly that the ETC was telling people that, they were in trouble and they wanted them to suspend those 3 stocks. And he said he was on the phone every 10 minutes. When are you going to release it? When are you going to release it? The guy from Robinhood just kind of gave like a press release. We're trying to protect you kind of thing. So they got people really ticked off yesterday and today. So,
well, I mean, there's a lot of manias going on. There's a lot of, buying, there's a lot of frenzies, I should say, not manias, but frenzies, the buying, obviously frenzy in homes. And that's why I think people have to sit back and, when they're buying a home, they work with somebody, I'm just going to say somebody like you that is going to kind of ground people a little bit. And because a lot of people have a tendency, I know you've worked with people that say, hey, let's put an offer in for this, or like, I think you're kind of you have a tendency to tap people down to reality. And I think that's
you may not get the bid, and that might be the best thing for you.
Yeah. I mean, everything has a tendency to work out. Like you said, and I mean, if people, they're committed to buying a home, they do it the right way, not get caught up in the frenzy. Yeah. You know, if you
Well,
see a house,
you're not going to believe this. We got a home a week and a half ago. A week and a half ago at the asking price. Beautifully remodeled home at the asking price.
yeah, yeah, and
Who would have known?
yeah, and
Now,
they're out there. They're out there. You can't lose your head over one or two, and you can't. You have to be grounded. You have to think logically. Um, you know, it just, you have to just cannot lose your head. Like I said, this week in the stock market, it lost its head. And I kind of get caught. I told you before the phone, I just told you briefly that I had been looking at BlackBerry for, that was one of the stocks I was caught up. And I was been following that stock for the last year and a half. And a lot of people think I was crazy. I called my buddy and said, hey, this is a good buy at 4.5. And unfortunately, I didn't buy any in the last couple months because I just been busy on the mortgage side. So I kind of lose track of stocks, the stock market, I follow it, but my mind is not into buying or selling lately. And because I've been busy on the mortgage side, but I told a buddy of mine, yeah, BlackBerry's a good buy at 4.5. And he goes, well, they're losing money. I said, look at it this way. They've been through the toughest time. They've been through tough times. Everybody had a BlackBerry years ago. They don't have a BlackBerry right now, but my philosophy was the company's still around. And they've got over like 20 or 30,000 patents, and their patents are all involved with the IoT, the Internet of Things. So I thought at 4.5, I said, there's going to be eventually, and they got signed down with Amazon's looking at working with them, Facebook on some things. So I'm thinking at 4.5, this is really just, there's no downside because it was,
yeah.
And sure enough as hell, the stock went from 4.5 to 28.
Yeah. Well, there's a reason I bring up stocks on our real estate show, and that is that as much as we follow interest rates and we follow inventory, there are other things that might just show up from out of nowhere that can screw things up. And I think yesterday was close, and I think it exposed the vulnerability of it. And I think that could be something that could make inventory come up just naturally. And as sales back down, and you could end up in a balanced market faster than you think, because the stock market can kind of recoup after a while, maybe, in a year. And, most crashes, they end up going up and you end up making some pretty good money the first 6 months after the crash. But those are some of the things I think that may balance the market out sooner than just the natural, attrition of people or not attrition, but, buyers scooping up the homes. That something's going to have to push that inventory out there. And it may be a black swan event like this that starts it.
Yeah, no, that's exactly it. I mean, I know I agree with you 100% because we've said before that, you look at interest rates, they've been pretty benign, at 2.5 to high twos. I don't see them going, you can buy, people, there's advertised, people can see advertised rates at 1.99, under 2%, but that's, you're bringing to the table 5, 10, 1 or 2 or 3 points to closing. So it could cost you several thousands of dollars to, get that advertised rate. That, once again, the advertised rates are for you to call the lender, and they don't show you the fine print of the buy down that it might, what it costs to get that rate. And
my brother in Washington State called one of those internet places, filled out the thing for a refi. And he goes, I'll never do that again. My phone's been blowing up for 3 days. So.
Yeah, people go on the internet. They go to Quicken, or they go to some internet site. Try to they see the lending trees and stuff like that, and they put their information in. I'm telling you, they're gonna get anywhere from 10 to 20 calls a day. If people want to be bothered by more than one person, go ahead and put your information on the internet, because I'm amazed how many people put their information on the internet. Then they get mad when you call. I don't do it. I get, basically through past clients and referrals. I don't do any of that, buying of leads, because I just,
Yeah, they just filled their name in, just put their phone number, and you go, "Hey, this is Rick with EXP." Click.
Yeah.
What'd you expect?
Yeah. If you don't, what do you expect? If you put your name and email and information in, you're gonna get calls. I mean, you think car warranty random calls are bad? It'll make you look silly. So I mean,
By the way, they have stopped calling me.
yeah. You know what? Our goal, whether I do business with somebody, my goal is to give people, the right information to help them make the best decision that they can make based on their situation. I want to present.
I want to address this question that Dustin has here. You can see below. So, what do large power line utilities near a home do to resale value? Right now, anything sells anywhere, but they don't help.
They don't help. I live on the canal right now, and behind me is I got my power lines. I mean, you go down
in a struggling market, it makes a difference.
Oh yeah, yeah. But
I had them in California, and people would walk. They would pull up in front of the house and they'd drive off because they looked up.
Yeah, I mean, I got several homes along my neighborhood. I mean, people are, I agree with you. I mean, but actually, I've been here 10 years plus, and or 15, and after a while, you don't even notice them. I mean, I've got one eye forming right here, but I mean, through the radiation, but
I've been over a couple times. I've got something right here, but I didn't address the comment here that said if fundamentals played a role, Tesla wouldn't be worth much. That's true, but there is a lot of speculation on things that he's coming out with. But there's also an over exuberance in the stock market to where tying the price of the stock to the earnings is way off. I know when my son was in junior high, this was right before the 90s bust. He came home from school and he goes, "Dad, you need to buy Qualcomm," because they're studying stocks and stuff. And I said, "What's the P/E ratio?" And he says, I don't know. I go, "Well, let's look it up." Because a good P/E ratio, pricing to earnings is like what, 20, 21? And
yeah,
Qualcomm was like 93.
Yeah. I mean, you look at the earnings. Earnings are, the Econ 101 is thrown out the window. I mean, I was Econ major, and if you saw a company back in 87, 88 when I was a stockbroker, if it was a PE over 25, you're like, oh my God. Now you got PEs in the hundreds. I think Tesla, there must be something with Tesla because Pelosi bought $1 million in call options here recently. So
that was what, ironically, she did that the day before they announced that all government vehicles would be electric.
Yeah, that's
amazing timing. I just, I wish I had that much vision. I marvel at that. So, and you can tell my sarcasm.
To go back to that though, just to bring it around. I mean, you're right though. I mean, to talk about the stock market, it all, we're all looking for, you and I have talked about where is the push going to come from, to push that supply demand equation back around. Because a lot of people have been selling stocks and buying their homes via cash.
Yeah.
There has people have been buying that. I mean, they have used their.
So there's been a ton of that. We have a question. Do you see a lot of new builds going up at Apache Junction in the future? That's anybody's guess. That's hard to tell. What you can do, if you go on my website, rick@rickhelps.com, I actually have a new construction tab on there that takes you to a new construction search site, so you can look around. But they are building, and they're starting to build a lot of different places, but they're not building. They're building smaller developments. They're being a lot more cautious.
Well, there's a lot of fill-in. I'm noticing in Chandler and Gilbert where last couple of years, you'll be driving down. I'm just like McQueen and Lindsay or whatever, and you see this big lot that looks like, it looks like there could be about 30, 40, 50 homes that they can put in there. And sure enough, they're filling in all these in-town lots.
There's one right next to the 202. I think it's just past McQueen. and they're hugging those babies right up against the wall on the 202. Your balcony, you'll get to watch rush hour. Hey, hey, welcome home.
I read something that there's DR Horton. It's in the Southeast Valley. I don't know if there's a big plot of land that they're talking about that's south of the 60. That's near Apache Junction that I guess they're looking to develop down there.
Yeah, and that area is growing like crazy. So just be careful that you don't do what's called drive till you qualify. I mean, you want to really live there. Don't get forced into a long commute. I know a lot of people that bought in Maricopa regret that commute coming up on that road. It's only 2 lanes. When I lived in Southern California, I saw people going out to Moreno Valley and driving from Moreno Valley all the way into LA. And I mean, that's, you might as well catch a plane. I mean, it 3-hour commute one way, 6 hours of your 8-hour shift is driving. And then when things went south, Moreno Valley was the first one to crash in a bad way.
That's what happened in 05, 06, 07. Maricopa, Avondale, Surprise were the first, all the Queen Creek, all those areas were the first ones to crash.
Yeah, I don't like long commutes. I mean, I moved to Albany, New York, and I was really proud of myself because I found a home that was 13 miles north of where my office was going to be. So I thought, oh, this is great because I just came from LA, right? So I was really happy about that. I get to the office and they go, "Oh, you're on the other side of the bridge?" I go, "What's that mean?" "Well, in the winter when it snows, there's a lot of wrecks on that bridge." I go, "Oh, great."
Yeah.
When you move in a corporate move like I did, and you got to go out and find a house in one weekend, you run into those kind of things.
Yeah.
So
that's one thing that people have to put into consideration because I mean, you got to look at your time. I mean, that's another thing that people really have to consider is like, how much do you like driving or not driving? Because, if you live in Apache Junction, you're, working in North Scottsdale, it's just something to consider.
Well, after 5 corporate moves, I learned the hard way. I knew what to ask for, what not to ask for, what to avoid. Of course, you don't see a whole lot of corporate moves now. There's not much of that going on. Dustin says, again, building's currently cheaper, but I'm worried about what the market will be in 10 months when done. Do you see any drastic changes by then? Based on the inventory numbers, no. The Cromford report is, remember, that guy's a mathematician. In fact, he made the comment on Cromford report, if we get down to 0 inventory, he said in Avondale, I don't need to even know how to comment on things as a mathematician that I can't divide. So, but I think, so his mathematical calculation, just common sense, shows that for the entire year, we're going to continue this strong climb up because we have, the buyers are consistent. And if you just saw it on my 7-day moving average, we only have 5,000 homes for sale now. Normal is 20,000. So are we going to get from 5,000 to 20,000 by September? No.
Yeah, well, wouldn't you say that even I kind of disagree with you a little bit. I'd say the normal market is like more like even like upwards towards 25 to 30,000.
Well, it depends on how you track it. I don't think that's active and UCB. So I'm just doing active listings. He's been looking to relocate from the Midwest. Seems hard to find a house before it has pending or contingent offer. What's the average time homes are on the market in Gilbert Chandler area? Day and a half.
Yeah.
If it's priced right. So what you got to do is, if you don't have a realtor, reach out. I can give you a hand. If you do have a realtor that's helping you, make sure that you're on a hot list so that you can know within 15 minutes. And you call him right now and say, go check that home out for me.
And if he's from Wisconsin, he's a really good guy.
Yeah, dude. So, Don, are you from Wisconsin? So, but I mean, that's really the only way you're going to do it if you're buying from out of state. You got to have somebody local go with a camera, with their phone, check out the home for you, see things that you can't see from the photos, and give an honest opinion of whether or not that home's a good value. It's just, I mean, it's just like, even if you're here, a lot of times I go look at a house and I'll call you and go, hey, don't even bother meeting me at the house. This thing's a piece of crap.
Yeah.
So it's the same way if you're out of state, because some of the photos can look fantastic, and you get in the house and you look at the floor trim, you look at the water damage, like, so he's from Nebraska. So
he's a good Husker. I like the, the Huskers are great people too.
Got
They're
friends
good
in
people.
Omaha. So
At least he's in the Big Ten. At least he's in the Big Ten. That's all. I'll definitely give him that appraisal discount on the.
So we're gonna do these Friday calls. Probably gonna do one more next week at 3:00. And we may just leave them at that time frame, but Monday through Friday, I'm going to be doing them at anywhere between 7:30 and 8:30. I'll put a posting up, and what I plan on doing at that point is you and I, viewers and myself, is I'm going to be showing you what I look at every morning. We're going to pull up the listings. We're going to take a look at it, and I'm going to go, here's what I see right now. Let's do our 7-day moving average. We can see what the number is, and then you can shoot me questions. Rick, pull up the inventory in Gilbert. I'm looking for something 300 to 400,000. Apache Junction. Let's go down to Maricopa, and you can ask me questions, and I can drill in and show you live what's going on every morning.
I'm confused though. When you told me about this, you said we're going to do the 3:00 call Friday, and you mentioned, I'm going to be doing a call at 8:00 in the morning. You're going to involve me too. I don't get up till like 10.
Yeah, that's why I said maybe we should do it at 3, because but
I'll get up.
I put down 3 times. I go 7:30, 8, and 8:30 in the survey. And last time I checked it, 8:30 was winning, and I thought, okay, all right, that's just I don't care. I don't care what time. I know that 7:30 is pretty popular, and if the survey says 7:30, we'll do it 7:30. But I think it'll be a nice opportunity for people to see and we'll pull up the Cromford report too. So the fresh numbers, you can drill down, because you can't research things on Zillow the way I can on the MLS. So great opportunity for you to look and see what we're doing. So, but
basically you get a real estate agent live.
Yeah. And you can see the data. So it'll be fun, but I will be drinking coffee.
Okay. All right, buddy.
Well, Pat, have a super weekend, and we will see you next Friday. Yeah,
and to tell that Don at Mr. Nebraska, I said we need more good Midwest people down here. That's what makes this city so. I love good Midwest people.
That'll work. So, all right, see you, everybody. Have a super week.
Take care.